Over the last several months, the industry as a whole, and most notably the market for venture capital, has seen a considerable upheaval. This is especially true for the market for angel investors. Angel investors are being asked to slow down and assess where they should spend their money in the venture capital industry. We would suggest that although the circumstances of the past few months appear to be dire, now is an excellent moment to invest money in venture capital. According to our point of view, the dislocations that have been caused by this environment have presented fantastic opportunities to invest in respected organizations on reasonable terms. So in this video, we're going to discuss why startups investment are the best during challenging times. Keep watching to know more, as hopefully these will be quite helpful for you in the process. Although public market valuations have dropped significantly as a result of rising interest rates and global uncertainty, which has had a knock-on effect on late-stage deals and has cascaded down to the earlier stages of venture capital, there are obvious benefits to building an early-stage portfolio in this environment, including the following. There is a lower risk of losing money in your investments. Public market valuations have dropped significantly as a result of rising interest rates and global uncertainty. This has had a knock-on effect. A decrease in the value of assets increases the number of investment possibilities. As a result of the decline in prices of early-stage venture capital investments, it is now able to provide entry point pricing that is more enticing. Because it was difficult to find an exit and the effect of volatile market conditions, the late stage of the enterprise required the most significant course corrections. Compared to Q3 2021, the values of Q3 2022 have decreased by close to 40%, and the number of transactions has increased by 20%. Nevertheless, the early stage of the venture has witnessed a more controlled response. As a result of the decline in the number of acquisitions that have been concluded, early-stage prices have also stabilized. To put this into perspective, the pre-money worth of early-stage businesses has reduced by 25% in comparison to 2021. Yet, this is still a huge increase above the levels that existed before the outbreak. The result is an environment that's more welcoming to investors, and that includes entrance points that are more desirable to potential investors. One more fascinating change that has taken place over the past few months is the decision made by businesses that completed a seed round of funding in the previous year to choose to extend their current round of funding rather than obtain a larger round of funding at a higher value. This is an intriguing turn of events that has taken place. This allows venture investors to choose acquisitions that were priced just too high a year ago. Although the company in question had wonderful founders and sound business ideas, investors can come in at the seed extension stage with the same wonderful founders and firms, but with a big decrease in the risks that are associated now that the company has shown additional momentum. The beginnings of each of these four companies, Microsoft, Uber, Slack, and Airbnb, can be traced back to periods of economic instability. The rate of technological innovation is not slowing down. On the contrary, it is continuing to pick up the tempo of its previous frenetic state. While at the same time, new technologies are being created, many well-established businesses have just recently started the process of digitally transforming their operations. Startup companies of today are focused on developing scalable solutions to problems that already exist in the world. It is a given that the economy is unpredictable. Nonetheless, although adaptability is the name of the game, it is clear that great firms are also formed during times of economic turmoil. Because there may be less competition for them at this time, entrepreneurs that have a lot of self-confidence are in a great position to succeed, provided they maintain their discipline and keep their attention on the early stages of product market fit. These companies will be ready to grow as soon as there are indications that the economy is beginning to show signs of recovery. Building in this environment will be challenging, but there will always be opportunities for those who have the intestinal fortitude, expertise, attention, and execution required to take advantage of them. Investors now have the opportunity to participate in the seed extension stage of the company with the same excellent founders in business, but with a much reduced risk as a direct consequence of the firm's shown capacity to generate additional momentum. Longer investment rounds provide the possibility of attracting more capital. Investors can invest with more rigor since rounds are moving at a slower pace, which enables them to gather more data points over a longer period, do in-depth due diligence, and get to know founders extremely well. If there are any lessons to be learned from the recent FTX debacle, it is that you can't cut corners when it comes to due diligence. From reading every document in the data room, testing the product yourself if possible, getting founder references, and speaking to customers, other investors, employees, or clients to fully grasp the financial model and what drives revenue in a business to how the board operates and how the cap table is structured, due diligence takes time. Getting founder references and speaking to customers and other investors, it is also extremely important to spend some time getting to know the company's founders, learning what drives them, and figuring out how you can help them scale their business most effectively. When confronted with challenging circumstances, creativity tends to flourish. The genetic composition of a company might be irreversibly changed if it is founded during economically challenging times. Those company owners who join this market and establish their companies from the bottom up will always shape their companies in a manner that is distinct from that of their competitors. As a result of being forced to focus on the most pressing issues confronting the world in a manner that is efficient with their money, business owners are more likely to be innovative and creative during economic downturns, as evidenced by history. This is because they are required to focus on the most pressing issues confronting the globe in a way that is efficient with their money. Building a company in a world where venture capital funds are not a limitless source of funding has its own set of unique obstacles, as we can confirm from my own experience as a previous company founder. In this reality, venture capital funds are not an unlimited source of financing. Ingenuity, perseverance, and expertise are all required, and the sort of business that has all three is the kind of business in which you want to invest. Startup companies of today are focused on developing scalable solutions to problems that already exist in the world. It is a given that the economy is unpredictable. Nonetheless, although adaptability is the name of the game, it is clear that great firms are also formed during times of economic turmoil. Invest in those who can do more with fewer resources by backing them financially. Those founders who can do more with the same amount of resources will enjoy greater levels of success. When it comes to fundraising, women and members of underrepresented groups have never had it easy. After all, they only get 2% of VC money, but it'll be significantly more difficult for them to do so in these times. Women and members of underrepresented groups have never had it easy when it comes to fundraising. In a strange twist of fate, this confers a competitive edge to would-be entrepreneurs who hail from a wide range of origins. They have always been required to be resourceful, which has taught them how to form lean but successful teams in whichever field they join. This ability has served them well throughout their careers. Women-led teams generate a return on investment that is 35% higher than that of all-male teams, according to a study that was carried out by the Ewing Marion Kauffman Foundation. In today's competitive financial market, having a diversified group of founders who have a history of being more thrifty with their spending is an extremely desirable asset. The most competent venture capitalists will perform excellently even when faced with challenging circumstances, just as the most capable businesses will be able to succeed even when faced with challenges. Investors who have been through previous market downturns and are better equipped to identify and nurture entrepreneurs through turbulent times will emerge on top, as will funds led by seasoned operators who can provide the strategic support necessary to ensure that founders grow sustainably while building a clear path to profitability. Investors who have been through previous market downturns and are better equipped to identify and nurture entrepreneurs through turbulent times will emerge on top. The most competent venture capitalists will perform excellently even when faced with challenging circumstances, just as the most capable businesses will be able to succeed even when faced with challenges. Because there are such difficult times, only the most resilient entrepreneurs will be able to invest and grow in the next few years. As a result, my prediction is that the next few years will produce exceptional vintages. Instead of actively participating in the market when conditions are favorable for investing, investors opt to sit on the sidelines and wait for better opportunities to present themselves. This phenomenon is characteristic of the vast majority of economic cycles. It takes place during a moment in the cycle when it's often a terrible idea to invest and the market is at an all-time high. During this time of economic recession, it would be foolish to pass up the opportunity to invest in enterprises that are still in the beginning phases of their development. You earn additional points if you express your support for a diverse creator or funder, as this is helpful to the whole ecosystem of innovation and results in greater returns. So what's your takeaway from this? Let's know in the comments section below. Also, don't forget to subscribe to the channel and click the bell icon if you want to get more informative videos like this. And we'll see you at the next one. Until then, peace.